Good morning, everybody, and thank you very much for your time. My name is Samantha Daya, and I look after custody and investment administration at Standard Bank. I'm absolutely delighted to be here with Bank of New York to host our Standard Bank and Bank of New York webinar as we explore and provide insights on the upcoming change in the settlement cycle to T+1 in the UK. Please let's have this engagement be interactive. We do have a Q&A section where you are welcome to post any of your questions. We also will be having a Q&A session at the end of the presentation. The session is for you, so thank you very much for your attendance. I'm going to hand over to my colleague, Stephen Porter from Bank of New York to take us further.
Thanks, Sam. I'm sure many of you know me, hopefully already by now, but just to say my name is Stephen Porter. I'm the Global Service Director here at BNY in partnership with Standard Bank of South Africa, and have been in partnership with them for my time here for the last 4.5 years. As Sam has mentioned, we're joining this webinar today with a focus on European and UK markets moving to T+1. We wanted to partner together as we did with the US move to T1 over 18 months ago, really to look and focus on what the changes will be implemented, what we need to focus on, and what that means for you here and now. Just to give you some high-level statistics, we've taken an overarching view across our alliance relationship with Standard Bank. And over the last 12 months, there's been approximately 15,000 trades that have failed to settle on settlement date, and approximately $340,000 worth of CSDR penalty fees have been applied. And therefore, we're keen to ensure we have the right narrative at the very beginning to mitigate some of those challenges that we've seen. Just in relation to those statistics, 40% are effectively due to late settlement of the instruction on or after the settlement date. So this is why we want to make sure we have the right conversation now, thinking ahead to the move to T1. Just also to signpost that we will also be back in region this year. We'll be back in South Africa towards the end of August, where we'll be participating in a roundtable event. And we'll also make sure that for any client that wants to focus on this, we spend time one-on-one looking at the statistics in order to have the right conversation. Without saying, I will hand you over now to the great Alan Taylor and Roberta de Paulus. And apologies, my pronunciation is probably going to be wrong, but I will hand over to the two gents now.
Thanks, Stephen. And Stephen mentioned there, this is a lead on from UST1. You may recall that we did a few sessions towards the start of last year. So we're now over a year into the UST1. So next up is EU and UK, and they're going to pose slightly different challenges. There's 27 markets in the EU and over 20 CSDs, multiple CCPs. And from Bank of New York perspective, we're direct in some of those markets, but we're also indirect using sub-custodians. So some slightly different challenges there for us to navigate as well. One good thing, though, is there's no affirmation models and trade suite IDs to learn. You may recall some of the educational materials that we were sharing around that this time last year. So we're going to walk you through why it's being introduced, why we're doing this in the EU and UK, lessons learned from UST1, a little bit on the governance structure and the work streams, our involvement, what are we doing from an advocacy perspective, the expected settlement flow, still some work to do there around the timings, but we've got a draft flow which we wanted to show you, and then a high-level action plan for you to go away and focus on between now and the end of this year. Planned go live is October the 11th, 2027. So it is some while away, but obviously there's a lot of preparation that we need to do between now and then. So why is it being introduced? Well, at the top there, you can see other jurisdictions, as we know, have already implemented T+1, US, Canada, Mexico and Argentina as well, also implemented T1 in 2024. So from a competitive standpoint, it's important that the EU and UK implement next. And UK has actually been preparing for this since 2022 when they announced plans to start looking at T+1. So it's been on the agenda for quite a while for the UK. It will provide investors, obviously, with quicker access to funds and quicker access to securities, and that will bring reduced costs as well. If you're an investor selling Europe, buying US, you won't have that cost of funding that's occurring today. It's going to force process automation as well. It's going to encourage trades to be booked correctly on trade date and streamline the matching process as well. So it's going to drive automation and efficiency, and that's only a good thing. It will reduce risk, credit risk, market liquidity risk from unsettled trades. There's going to be less in-flight and outstanding trades as a result of having a reduced settlement cycle. And in line with the above, a reduced period gives less risk of market price fluctuations, which has been quite a feature in the last year or so. And that will impact positively on margin and margin calls. So apparently for the US, there's been a reduction of 28 to 29% in margin cost reduction. So significant benefit there from a margin perspective. And then finally, we can't forget the road to T0, because this is what this will lead into. You can see there that the EU and UK have gone through T5 all the way down to T2 already. T1 is next, but we shouldn't forget about T0. There's no time frame for that, but that could be towards the end of 2029, 2030 and onwards. Lessons learned from US T1. Early engagement is key. Interesting stat that we picked up here is 30% of the asset management community hadn't engaged around 3 months prior to the US launch. It was a late engagement from a variety of counterparties for the US T1 launch. We want to make sure that doesn't happen this time round. That was the whole market that was engaging a little bit late for US, and that did have some knock-on impact. Communication is really key. Communication, and that's across the entire value chain. That did work well in the end for US T1 actually, so it's important that communication is a factor, and that's with all of the the brokers, custodians, counterparties, vendors. Communication is really key. Scope is important as well. Now for US, the defined scope was actually only confirmed a few months prior to May 2024. So it's quite a late confirmation in terms of scope. Now for the EU, that's being looked at already. So those work streams covering scope, of which Roberto is actually co-chair, who's on the call with us today. So we're starting a lot earlier for the EU and UK, and it's very important that we do that. And then finally, automation. No surprises, you're going to hear automation mentioned a few times today. So interestingly, 75% of all of the automation projects for the US T1 had a deadline which came in after implementation date of May 2024, and I think that just goes back to the lack of early engagement across the board there. As a result of that, a lot of firms threw staff into their US operations, and staffing costs rose almost 20% on average. So hoping this time around with much earlier engagement in the industry that will be reduced. And again, it's that focusing on T0 eventually and trying to implement those changes so that they're future proof. 3 areas to focus on. SSI automation is key. Making sure that you update your SSIs in a timely manner, and maybe there's some automation around that as well if you can do. Poor quality SSIs can lead to fails and mismatches, so SSIs are going to be important. Core processing, obviously, that needs to be automated, and corporate actions as well. Can you respond to a voluntary event quickly and efficiently in an automated fashion? And then finally, recalls. How automated is that process in the way that you can notify Standard Bank or ourselves as well? So automation is critical, and some lessons learned there from US T1, which I think is important for us to take note of. I'm going to hand over here to Roberto, who's going to a little bit around the work streams for EU and UK.
Thanks, Alan. And Stephen, your pronunciation was almost perfect of my surname. Let's look at the governance structure starting from the European Union. So you will see quite a colored slide. On the left-hand side, the bluish part, it's the part related to mainly to the authorities. So you will see the coordination committee composed by the ESMA. ESMA is the European regulator. There is the chair, the representative, then the European Commission, the European Central Bank's representatives as well. There is also a connection with the industry committee through the chair of the T+1 industry committee, Mr. Giovanni Sabatini. There are some observers, including all the national competent authorities. As Alan was mentioning, the European Union is composed by 27 countries. Therefore, you can imagine, the representation of all of these countries can be quite high. If we go to the middle of the slide, there is the EU T+1 Industry Committee, which is mainly composed by the chair, and then there are the two co-leads of every work streams. The work stream are detailed on the right-hand side. Then there are the representative of the associations like AFME, AGC, ISLA, EXTA, every association you can think of working in the European landscape is present. And there are, of course, observers from the coordination committee, meaning representative from ESMA, the European Commission, the Central Bank, etc., etc. The right-hand side, so the technical work stream, we can consider them as really the core of the industry committee because that's where the work is really happening. So you will see there are 11 vertical work streams and one horizontal. The 11 vertical ones are the scope, which I have the honor to co-lead. Then there is the legal and regulatory, trading, matching and confirmation, clearing, settlement, FX, securities financing transactions, asset management, the AMISECO corporate events group, and the settlement efficiency. So these are the 11 so-called vertical because they look after just one big topic. The horizontal one, and probably the key element of this, is the operational timetable, which is composed by the co-lead of the 6 work stream you will see there. So trading, matching and confirmation, clearing, settlement, FX, and securities financing. And the reason for the creation of this operational timetable is because every decision taken in one of these work streams would have had knock-on effects on the other. Therefore, it was thought to put, all the colleagues together and come up with a common proposal, which will be deep dive in a few moments. If we move on to the next slide, we can see the UK structure. Now, this is a bit less colored than the previous one, but the concept remains exactly the same. We have a chair, which is Mr. Andrew Douglas, then the oversight committee, including the association like AFME, the CSDs, etc., etc., and then all the various work streams. I'm not going to list all of them because they would be more or less similar to what I just discussed about the European Union ones. But what is important to say is that every type of activity done in the work stream then was delivered to the oversight committee and the chair for final blessing. Moving on to the next slide, we can definitely see what we are doing at BNY. So in the UK, we have been contributing to the Accelerated Settlement Task Force. Forgot to say before that slide you saw, it's really the Accelerated Settlement Task Force, which is the entity governing the change in the UK. So we have been participating in all the work streams. So we've been contributing to the work of every work stream. I'm really close to the developments in the UK, and we are extremely close in the developments in the EU because I'm co-leading the scope work stream, which also allows me in all the 12 work streams. We are in the national committees. As I said before, the European Union is composed by 27 countries. We are direct in 7 countries in Europe. So in all of these markets, we are also member of the national committees. And finally, we are members of all the various associations like AFME, AGC, EBF, which have on their side created their own internal work streams, work groups, in order to discuss the T+1 topic. Moving on to the next slide. So the first important thing I want to say, it's also highlighted in red in the title, this is a draft and can be subject to change. I will be discussing briefly the upper part, the T2S settlement cycle, and Alan will then talk about the UK settlement cycle. So T2S is the settlement platform, the common settlement platform in Europe for all the markets using euro as a currency, and from last year also for Denmark, which is still using their own currency, the Danish krona, DKK. In the upper part of the slide, you will see the current situation. So the T+2 cycle with the input disabled for sending instructions to the overnight cycle set at 7 p.m. CET, European time, and then on T+2, the DVP cutoff at 4 p.m., free of payment cutoff at 6 p.m. Obviously, with T+1, there is the need to compress all of this time. So what we are currently doing, when I say we, I mean the custodian, in 1 day and a half, is going to be done in a few hours if we want to include the transaction into the overnight net cycle. So starting from the left, you see trading happening from 8 a.m. to 10 p.m. Then there is the 11 p.m. deadline for the allocation and confirmation. And then the night settlement instruction deadline is 1 minute before midnight, because midnight is the moment where the settlement starts for the overnight cycle. You can see here there is an acronym C1S4 that is really what is identifying the settlement cycle. Then there will be a pause, and then at 2 a.m. the second phase of the settlement cycle will start, and it's called the C2S4. And then we'll start the day. We move on throughout the day regularly. There are a couple of deadlines, 3 p.m. and 3:30 p.m. related to stock loans, recalls, and then, like now, 4 p.m. as a DVP cutoff and 6 p.m. as a free of payment cutoff. Alan, back to you.
Thanks, Roberto. And similar story from the UK. You can see under a T2 cycle there, trading is going on 8 till 6. You can see that allocations and confirmations are happening from T into T1 today. Yeah, and you can then see that settlement instructions are being processed throughout T1. Input disable, that's CREST, UK CSD terminology for the deadline when the system closes. That's 8 o'clock, and then you can see the DBP cutoff, FOP cutoffs on T2. So you can see a very different compressed cycle at the bottom there for under T1, trading again occurring 8 till 6. I'll just pick out a couple of the timeframes for the UK there. Input disable again, that's the proposed deadline, 10 p.m. To input instructions to CREST. 23:59 is a deadline to pick out for allocations and confirmations, and I believe that's coming in with effective date end of December 2026, so that'll come in before the actual T1 go live. And then CREST opens up again at 05:59 the following morning. So it is possible apparently to send instructions through the night there, and they can queue up into the CREST system, and they can still get matched prior to the start of 05:59 the following morning. So I think the main point here is lots of time frames for everyone to look at, but it's the compressed nature, and these are market cutoff timings, and these are local times as well. So you're looking at UK times and CET timings on the top box, subject to change, as Roberto pointed out. But I think it just gives you a good picture as to how compressed that's going to be. Roberto, I'll hand back to you briefly to touch on corporate actions, if that's okay.
Absolutely, Alan. Thanks. Corporate action, we know that is always one of the main areas of concern in the financial markets. There are three main key impacts for the corporate action. First one being the impact to the key dates within the timetable. So, for example, mandatory distribution event types like dividends will see the X date move 1 business day. So it's going to become equal to the record date. So, for example, if tomorrow is the pay date for a dividend, we will have the X date in the morning of today and the record date at the close of business of today. So same day, but different moment during the day. For elective events, instead, the last trading date may become 1 business day prior to the market deadline, which again is going to give a bit of pressure to the investors. The second item is the automation and harmonization of market claims and transformations. So the target here is to ensure that all the EU markets have a robust process should transaction fail settlement, which is the same process across all EU markets and issuer CSDs. Now, why this is relevant? It's relevant because today, the various countries in Europe do not have a similar process for managing market claim and transformation. Therefore, considering the shortening of the settlement cycle, having an harmonized approach will definitely be a key point. Last but not least is the automation and the harmonization of buyer protection. Again, buyer protection today is not very much used in the European Union, and is also, the format is free. There is no clear guidelines and processes to make. The target here is to implement automation at the level of the issuer CSD, so that buyer protection will be allowed and processed in an automated manner, because of course the time to process it is going to be shorter. Back to you, Alan.
Thank you. And finally, we have a slide here around key actions. So you might be thinking, what do we need to do next? What do we need to focus on? It's 2 years and 3 months away. So act now, invest, automate. That's very much a regulatory message. But the thing to do is to have a look at your operating model, perform an end-to-end review as to how are you funding, what's happening between trade date and settlement date. Are there any manual processes that exist? If there are and you need automation, then request budget this year. So it's very much a year of requesting budget, trying to get that stakeholder approval, and then executing and implementing those changes in 2026 so that everybody's ready in 2027. Behavioural changes, there's no need to wait to make some of those changes. There's functionality in Crest to do partialing and hold and release. So the idea is to instigate some of those changes now, certainly in terms of behaviours. Automation, we've spoken a lot about. Communication, we've spoken a lot about as well. And finally, there at the bottom, engagement. So that's where ourselves and our colleagues and partners at Standard Bank will become involved as well. So there'll be more sessions such as this and more dialogue. Stephen mentioned at the beginning that he's in region as well. So have a look at your model, have a look at some of those manual touch points and where you think some of those pressure points will be, and then we should discuss further. I'm not going to go through this slide. It's obviously T+1 is a market change which is implementing a number of markets, not least some of the ones in Africa as well. So we'll leave that for folks to take away and review. And I think now we can move into the Q&A. I know we've got 3 or 4 minutes left, but are there any questions in the chat?
Alan, I don't see any questions posted at this point in time. But maybe as a starting point, you could tell us what are the next steps in terms of this, in terms of the timeline, and what you are also hearing from other clients that you may have engaged with in terms of the next steps.
Alan, I would take the first part of the question and you the second, if you don't mind. So in terms of next steps, for UK, there is an implementation timeline which has been established by the AST, Accelerated Settlement Task Force. There are some activities, there are some milestones to be reached within 2025 to 2026, and in order to ensure a smooth transition in 2027, in October 2027. So actually, UK is all about implementation. EU, recently, the industry committee released their report, which is including all the recommendations that should be taken in order to make our way smoother towards the implementation in October 2027. The report is not finalized yet because there is a public consultation ongoing up to the end of August. And after that, the recommendation will be considered final unless there is obviously any major change upcoming from the consultation. So this is the next step for you.
Thanks, Roberto. And in terms of what we're hearing from other clients, it's very much a sort of a preparation phase this year. So we are hearing clients are looking at their STP raise, they're looking at their operating models. So we're trying to get that engagement. There's a number of webinars that have come out, from the industry. You may have seen DTC, Value Exchange, and 1 or 2 others. Euroclear. EUI had a webinar last week, so you'll start to see more and more engagement and panel discussions around some of the developments, and I think that will continue this year. But it's very much in terms of our responsibility to try and get that engagement with our clients, and the clients are now starting to get on that journey, which is good. I know we touched on at the beginning how that took a little bit longer with US T+1, so I think that's only going to accelerate. We're going to be producing more materials and FAQs. There'll be further webinars as well to come, and our website will be back up and running where we can post those materials as well for clients to access. So definitely more to come as we start the journey.
And I would just add, if I could, on that one, just on the client side, what we're seeing clients ask us for, which is available via Nexon today for those Nexon users, is what does the data for me tell you as a client? So it's consuming the historical, trades that you've got. What's the input time that we've received it at? And that will allow you to really look at where you need the efficiency. So seeing, are you on settlement, date or after? Are you coming in on, settlement date just beforehand? Allowing you to really see that end-to-end model from the ops flow from your instruction piece right the way through to settlement. And we can work with clients again, looking at what reports look like, where to consume that information from, etc. So again, a lot of that already exists today to help you in your analysis.
Thank you. Thanks, team. I'm just cognizant of time, so I'll just hand over to Sam to close.
Thanks very much, Jen. Just from my side, I'd like to thank the Bank of New York team. Some powerful insights that's coming through. The message is around preparing ahead of the change, automation, if we need automation, to ask for the respective budgets early enough, being operationally ready, ensuring that clients are informed. So communication, harmonization are some key themes that has been discussed today. So from my side, thank you very much. If you do have any other questions, you're most welcome to please contact your Standard Bank account management team with any other questions. But thank you very much for your time, and then we'll see you soon. Thanks, everybody. Bye.